Hello and welcome. In this video, OJM partner Carole Foos provides an overview of the employee retention credit and discusses a new law that has expanded the ERC, making many medical practices eligible for significant tax savings. OJM Group Partners are the authors of 12 books written specifically for doctors, including our newest book, Wealth Planning for the Modern Physician. To get your free print copy or ebook download, text OJM Web to 844-418-1212 or click the button below.
Thanks so much for joining me today. I'm Carole Foos, a partner at OJM. Happy to have you with us. And I wanted to talk to you today about medical practices and the expanded employee retention credit. For those of you who aren't aware, the employee retention credit was first passed under the CARES Act in March of 2020. And it was passed as a means of encouraging employers to keep their employees on their payroll, even though they may have been fully or partially shut down, or they had seen a decrease in business due to the pandemic. So as originally passed, the credit was a credit of 50% of qualifying wages paid to employees up to a maximum of a total of $10,000 paid to employees. So essentially, you as an employer, as a medical practice owner, could get a credit of up to $5,000 per employee during 2020. Now, in order to qualify for the employee retention credit under the CARES Act, your business needed to show that it had a 50% decline in revenue for a quarter in 2020 as compared to the same quarter in 2019, or that the business had suffered either a partial or full shutdown due to a government order related to COVID-19. So if either of those things occurred, you saw a greater than 50% decline in revenue in 2020 as compared to 2019, or you were partially or fully shut down, any wages you paid from March 13th of 2020 through December 31st of 2020 would qualify. Again, maximum wages eligible for the credit were $10,000 per employee, meaning a maximum credit of $5,000 per employee. Now, if you were a medical practice with less than 100 full-time equivalent employees, any wages that you paid to your employees could count as qualifying wages. And in addition to those wages, healthcare expenses that you covered for your employees would also count. So if you're covering part of their medical insurance, that would count as well. If your practice has greater than 100 full-time equivalent employees in 2020, then you could only use wages that you were paying to employees who were not actually providing services. So for example, your employees couldn't come to work because of a shutdown, but you were still paying them, or you furloughed some employees but kept them on your payroll. Now, in looking at that less than 100 employees or greater than 100 employees count, aggregation rules apply, meaning if you had more than 50% common ownership between your medical practice, your surgery center, maybe your building LLC, any ancillary services that were in separate entities, you would have to treat all of those entities as one in determining your employee count. So that was what the rules were for 2020. Wages paid from the middle of March 2020 through December 31st. Back in December of 2020, Congress passed the Consolidated Appropriations Act, or the CAA, and that expanded the employee retention credit. It extended it for any wages paid through June 30th of 2021. Now, also, as part of the CARES Act back in 2020, they had said if you, as a medical practice or any business, received a PPP loan, then you were not eligible to also take this employee retention credit. Well, the Consolidated Appropriations Act got rid of that restriction not only for wages going forward, but that was retroactive. So if you talked to your CPA back in 2020 about the potential of taking the credit and we're told, no, you can't do it, you got a PPP loan. If you haven't revisited that, you can actually go back now, rerun the calculations. You may be eligible to take it even on the 2020 wages. And if so, that would allow you to go back and amend some payroll tax returns for 2020 and take the credit. In addition, the CAA increased that credit to 70% of wages. So for 2020, it was only 50% of wages. It went up to 70%. And now for 2021 is not just a maximum of $10,000. It's actually $10,000 per quarter. Another great change under the CAA, that 100 full-time equivalent employee count increased to 500 employees. So now, as long as your combined businesses have fewer than 500 employees, you are eligible to take the credit on any wages paid to those employees, whether they are working or not working. Again, if you're over 500 employees for 2021 wages, you can only take the credit on wages you are paying to employees who aren't actually working for you. Even better, that gross receipts decline changed from a 50% threshold to a 20% threshold. So what this means is in 2021, if you had a greater than 20% decline in gross receipts as compared to the same quarter in 2019, you would be eligible for the credit. Still eligible under that full or partial shutdown as well, even if you don't have that revenue decline. And they added some language in the CAA to say that full or partial shutdown would make you eligible if it caused a more than nominal impact to your business. So, right, more than nominal impact, that's pretty broad-based. The IRS did come out with a notice 2021-20, to sort of somewhat define what more than nominal impact means. Essentially, what they're saying is you can look at various parts of your business, and if that part of your business had a greater than 10% impact from your shutdown or from a shutdown around you, then you would likely be eligible. But I would tell you, certainly what I want to encourage you to do today is reach out to your CPA, because for many businesses who thought they weren't eligible for this, they likely are eligible. You can talk to your CPA about that notice 2021-20 and see if your business qualifies under the more than nominal impact rule, or if it qualifies under the gross receipts decline. But again, you're looking at a credit of up to $28,000 per employee on 2021 wages paid. And you might ask, 28,000? Well, that CAA extended the employee retention credit for wages paid through June of 2021. Along came the American Rescue Plan Act this spring and actually expanded the credit even further. So it's now wages paid for all of 2021 are now eligible. So that's how 70% of $10,000 of wages per employee per quarter, so $7,000 per quarter per employee, could get you to a $28,000 credit per employee in 2021. It's really a great opportunity. Again, I would highly encourage you to reach out to your CPAs about your eligibility under this credit. They also, under the American Rescue Plan Act, put into place an ability for you as an employer to elect to use the prior quarter's gross receipts for determining that 20% decline in gross receipts. So what I mean by that is, if it's now, Q3 of 2021, you can look back to quarter 2 of 2021 revenue as compared to quarter 2 of 2019, see the decline. If you're looking back and saying, hey, did I qualify in quarter 1 of 2021, you could actually use your Q4 of 2020 gross receipts to make that determination and compare that to Q4 of 2019. One other thing that the American Rescue Plan Act added was the ability for new businesses that started after February 15th, 2020, they call them recovery startup businesses, to be eligible for the credit. So again, if you started a new, surgery center, or you started a new business related to your practice, or even if you have a new practice, you may still be eligible for this credit under the American Rescue Plan Act. So I would again encourage you to speak to your CPA about that. In terms of claiming the employee retention credit, several different ways to do that. If you find that, hey, I never claimed it in 2020 because I got a PPP loan and I thought I couldn't claim it, now you might be eligible to claim it. You can file or have your accountant file an amended Form 941, which is your form where you're reporting employer and employee Social Security, Medicare taxes, and federal withholding. So you could amend that form and get a credit against your employer Social Security taxes, and that is refundable if the amount of your credit exceeds the amount of your Social Security payroll tax. Some of you might be eligible for an advance payment. That advance payment is limited to 70% of your average quarterly payroll, looking at the same quarter in 2019. And for Q3 and Q4 of 2021, you could actually claim the credit on your 941 as you originally file it because it hasn't been filed yet. It seems that the fastest way to get it is certainly on an originally filed 941 versus an amended 941. As you might imagine, the IRS is getting a lot of those amended 941s filed right now, and there's a backlog of those. So in terms of getting the money sooner, again, I would encourage you to speak to your accountants now and see if you're going to be eligible for the credit for Q3 and Q4 of 2021. So you can claim it as you file your 941. Also know that you can file an amended 941 through the time of the statute of limitations running. So for federal tax returns, essentially, they can come back and audit you for 3 years after the due date for filing that tax return, or the date you filed it if that's later. So if you think about for instance, Q2 941 for 2020, you've got until really sometime in 2023 to amend that 941. But I would certainly encourage you to do it sooner, to get the money in your hands, to reach out to your accountant. As I mentioned at the beginning, I really think this is a great opportunity for all of you. Also, I want to let you know, as we record this webinar in August of 2021, the IRS just a week ago on August 4th or 5th published Notice 2021-49, which addresses some more details regarding the employee retention credit. Some of those relate to what are qualifying wages when you're looking at majority owners. So again, if you're the greater than 50% owner of the practice, maybe you've got a family member also employed, there's some detailed explanation of how you can look at whether your wages and wages paid to your family members qualify. So take a look at that, talk to your accountant about that as well when you're looking at this credit. Again, I'm Carole Foos. Thank you for joining us today. And certainly we're happy to reach out if you've got any questions related to this topic, the employee retention credit, and how it's been expanded through the latest legislation that has passed. And again, reach out to your CPA, take advantage of this credit. Hopefully it gets some more money in your pockets. Thank you.
OJM is a multidisciplinary wealth management firm, and we have worked with over 1,500 physicians, businesses, and individual investors throughout the country. We would welcome the opportunity to speak with you about how we might be able to bring value to your wealth planning. OJM Partners have authored several books, all of which are available to webinar viewers at no charge. You can get a free print copy or ebook download by texting OJM Web to 844-418-1212. You can also visit ojmbookstore.com and enter OJM Web at checkout. In addition to a free book, OJM Group also offers viewers a complimentary consultation where we can answer your questions and see if our firm might be a good fit for your situation. Visit ojmgroup.com or call 877-656-4362 to schedule a free consultation. Enjoy the free copies of our books, and we hope to have the opportunity to speak with you. Thanks for watching.